Hey everyone, Scott Cunningham here, aka Scottsy Business. Today we're going to be going through another installment of my dividend portfolio updates covering the last month and a half or so. So let's jump right in here. We're going to be looking first at my stock updates and my dividends from that, and then we're going to be looking at the crypto side of things. So last month in September, I made about $70 in dividends, and that marks an all-time high for the most dividends earned in 1 month. So that's fantastic. Really, really great to see. And you can see here the progression of my earnings, and hopefully this continues up as this projection shows. I also in August forgot to add the this royalty payment that I got, so I also made sure to note that. So in total, so far, I've earned about $262 estimated. I have to update this. This is only covering my TD balance, but now I'm also investing on Questrade and, well, Simple. I am also starting to do a little bit of growth stock investing in lithium batteries and lithium in general. So that's something that I'll be doing, but I won't really be reporting on it on here unless you guys are really interested. This is mainly about passive income, as it always has been. So let's take a look at the actual stock buys that I've been doing over the past little while. So lots and lots of changes. My account is now worth $19,648 in total. It was just recently a little bit over 20,000, so it's a little unfortunate to see that dip down, but actually I should probably refresh this before we get going. So it's a tiny bit more down, but again, that's fine with a dividend portfolio because the whole thing about it going down, I mean, the value going down is that then we can take advantage of the price opportunity there. As you see, lots and lots of opportunity still. So, don't get too concerned with stuff like that. There's always going to be things going on. I mean, oil is down, and a lot of my other stocks are going up. Energy is pretty down, though. You can see Suncor has been doing pretty poorly. I'm down $200 there, but I'm up on a lot of these stocks, so I'm not too concerned. I'm still up overall 3%, and I've been earning quite a bit from dividends, so that's been really great. And my overall annual dividends per month now is $117.22 on average. And again, that's just fantastic. Tons and tons of money coming my way, and yeah, it's really great. So let's look at the actual individual stock buys and everything I've been doing. So I did actually buy a little bit more of Suncor Energy when it dipped really, really low. That might have been a poor choice, but there was just such a good price opportunity that I said, hey, why not? It's a great company, so I see them going back up to where they were before sooner than later. And if I'm wrong, I'm wrong. I also bought a little bit more of Rio Real Estate. I was just kind of shifting some things around. These were performing really well. So well, in fact, that I had so much extra money on these stocks that I decided to shift it around a little bit. And that's why I took some from here and put it into my lower performing stuff to sort of balance out the portfolio a little bit. I also invested more into Manulife Insurance because it's a great buy right now. I took a little bit out of some of my other well-performing stocks. Well, actually not for TD. TD has been pretty down because I bought it before all of this even happened last year. But I was kind of over-invested in TD, like compared to everything else. So I wanted to take a little bit out of that and invest more in some other banks as well. Because I also was doing really well with Canadian Western Bank, and I figured I'd take a little bit out of there. And instead, I invested into Royal Bank of Canada, National Bank of Canada, and the Bank of Nova Scotia. So that way I've sort of diversified the different banks that I've been investing in, and I feel pretty good about that. So I'm not really concerned when prices are dipping a little bit. Some people think there's going to be another wave. Whether or not there is, I've got money set on the side, and if there is, we're just going to spend a ton of it investing back in the dips, because again, don't get scared and sell on the dip. that's how you lose money and you lose value. Buy the dips. If you're trying to invest long term, that's the best way you're going to do it. Like a good example of why you always invest long term is because I remember just as COVID was starting to become a thing, maybe it was January or like December, but I remember talking with some friends who were investing or had only recently started investing. And they were saying things like, yeah, but I'm only going to invest like $1,000 or $2,000 and then pull out in like a year or two. How much money do you actually expect to make in a year or two of investing in the stock market? You could lose money, right? Especially with that little of a principal. You might only invest in like one or two stocks, and then they might not do well. So I don't think it is a good idea to do short-term investing, especially when you have very little experience. That's probably the worst path you can go because there's a good chance you might lose money. Or if you're doing it through your bank, they're going to be taking a bunch of money for helping you. They're going to invest in really safe stuff. Maybe you make a little bit, but it's going to be almost negligible with inflation. And I just don't recommend it at all myself personally. But, I'm not a financial advisor by any means, so don't take my advice. I also invested a lot more in these general ETFs that are just, high dividend, like high dividend ETFs where I'm trying to get like monthly dividends from these. They're invested in a bunch of great companies. So a lot of these general ETFs that pay out good dividends, I think it's a very, very easy way to invest because, if you're invested in a dividend ETF and say one of the stocks they're invested in cuts their dividend, then they will automatically remove that for you and invest in something else. So you don't really have to track like dividend changes and all these different things and worry about all that. But then you also have the exposure to, the bad side, right? Like if a bunch of those stocks do bad, or all cut their dividends or whatever, that could be negatively affecting you as well. But by spreading it out, it's a lot less risk because you're exposed to more of the upside and more of the downside, but it's all kind of, it's just a lot easier because you can invest in one single stock that might be very cheap and they might be investing in very expensive stocks. And that way you don't have to spend like $400, $500 to invest in, one stock. You can put like $100 and buy 5 ETF stocks that are invested in a bunch of different stocks. And then you get all that exposure. And then you don't have to spend tons of money on trades, right? Because I trade on my bank and it's $10 a trade. That is a crazy high fee, right? So if you're doing tons and tons of trades, then you're going to lose a lot of money just in your trades, right? So I've probably spent upwards of $500 in the past year just on my trades. But since I found Questrade, which is $5, and I found Wealthsimple, which is free. You do have to consider, though, that when you're using zero commission trading platforms or even cheaper trading platforms, they will still be doing some stuff to make them money because there's no free lunch, right? They'll be sending your trades through specific traders so they get kickbacks. They'll be, sending you to a brokerage that might be slightly more or, trading on an exchange that is slightly more expensive or whatever it happens to be. There's really no free lunch. So it's not going to be infinitely better to just trade on Wealthsimple because there's zero fee trading. The reason that I like to trade on multiple exchanges is I like to have different accesses in case something happens, like my bank account gets hacked, which happened just the other week, which is also why I have 2 bank accounts. But then I also couldn't access my investing. So because I was invested in Questrade and Wealthsimple, I could still, access that and continue investing and do all that stuff through those accounts. So that allowed me to still keep doing what I was doing with no, issues. And if for some reason I fully lost access to my one bank account and my investing account, I still have everything else. I mean, obviously, the majority of my funds are concentrated on my bank stock investing account, but going forward, I'm going to be really spreading that out so that if there was an issue, I only feel, only a third of my wealth is affected, for example. So that is a much safer way, I would say, to invest. And it allows me to kind of test out all the different platforms and all the caveats of everything. And it gives me a much more holistic view of stock investing in Canada, at least. So that's my take on that for now. Those are the buys. I feel pretty good about where I am right now. I don't see a second wave having the impact that people think it's going to. I believe that oil is definitely going to come back, but I'm going to start investing in a lot more stocks, because I'm going to be looking at renewable energy, solar energy. I'm going to be looking into a lot more. I have tons and tons of stocks that I'm looking at right now. I'm also going to buy a little bit of like gold stocks, get a little bit more into, packaged foods, different things like that. And then I'm finally going to start investing outside of Canada. I previously was just doing Canadian stocks, but now I want to get more into investing in the US and maybe a little bit more internationally, now that I've got more of a solid base for my investing. And as we go forward, I will be able to cover all that, and maybe it'll be a little bit more relevant to you guys now that I'll be able to be covering more countries, and so that if you're only investing in the US, for example, that this may be more relevant to what you're doing. But really, it should just come down to your specific strategy and what you're trying to achieve. So this is my breakdown in terms of what I'm invested in. They say you shouldn't be invested more than 15% in any sector. So I actually am trying to bring down my real estate a little bit, but I feel really confident in real estate. I mean, this is to make up for the fact that I don't actually have real estate myself. So I'm invested a little bit more in real estate than everything else. But eventually I would also like to get a rental property and get that going as well for a much, much more reliable passive income. But that's my breakdown for that. Let's take a look at the crypto side of things. Actually, just before we do that, I'll bring up Realty, which is how I invest in crypto property asset, tokenized assets. I just recently bought another few shares of this Florida property, which is really, really great. And sorry, let me just turn off my phone notifications. Yeah, so I bought this Florida property, and I'm glad that they're finally doing more Florida properties, because most of what they were doing was in Detroit. And I'd like to see more diversification in at least the location, even though I know Florida is, got hurricanes and all that awful stuff. But I wanted to diversify the actual geolocation of where I was investing in. So I felt good buying that. Realty's been really solid, paying out on time every time. I'm getting around $6 to $7 a month or so. I mean, this isn't perfect for tracking because they've been sending payments less frequently due to Ethereum gas fees, which is completely fine. As long as they're still sending the payments, I'm totally happy. And I've been making, a pretty good passive income from this. It's not a huge investment. I've only got about $1,333 Canadian invested. So it's nothing like super crazy, but it's performed very well and it's been very reliable. So I'd love to see more real estate tokenized projects. I've looked at so many, and I've not found anything that is working or that allows you to start investing at a very low price. Now, moving on to crypto. I've changed a lot with my crypto portfolio, and all that happened last month, really. So there was several of these cryptocurrencies that I've invested in that weren't paying very much. And I decided to sort of pull back on the ones that weren't really paying much and kind of double down on the ones that were paying very well. And I feel pretty good about that. You guys can let me know your thoughts on that. But essentially, you can see all the trades I made here. With BitMax, I'm just taking my profits and then buying more. So that's the change you see here. BitMax has always been really, really great. I'll go over the actual earnings for each of them. Loom. So you can see I sold a few of these. I sold Troy, Kyber Network, and ARPA, and then I put those profits into Loom, Fetch, Algorand, and Tezos. The main reason that I was getting out of Troy and ARPA is just because I wasn't making much and the payments were very far apart from each other, and I want something that's more compounding. Like the more often they pay, the more money I'm going to make because it's compounding. And Kyber Network was just awful. I wanted to I took out my Kyber, I staked it on the Kyber organization, which cost me about $5 in gas fees. But then the only way to earn rewards was to vote on each epoch, which is just like they're going to make changes to Kyber and you vote on it every 2 weeks or so, and then you get rewards for participating in the governance. That sounds great, but to vote was another $5 every 2 weeks. And all I would end up making is maybe like $1 or less in rewards. So what would really happen is every 2 weeks I'd lose $4. So I decided to take the hit to unstake another $5, and then I sold Kyber because I was just so done with it. Anything that requires you to interact with it and spend gas fees to do so on a very regular basis is definitely not going to be reliable or sustainable. So a lot of these are just soft staked on Binance because that's just the easiest way to do it. I wouldn't recommend keeping a lot of money on Binance though, because obviously that's sketchy. And we've seen them use funds from like Steam in governance before. So definitely you don't want to leave a ton of money on there, but I'm fine to leave maybe like $1,000 worth of crypto just to earn from soft staking. I should probably also update this because this is a lot higher now. There we go. Yeah, so that's everything for Binance. And then for my lending platforms, they've continued to perform really well. Let's actually take a look at what I've earned from each of these coins. So down here, I've been tracking the actual earnings. There we go. And then the actual values for each month as well. So you can see in September, I earned 62 Loom worth $1.29. BitMax paid me $13.44. BitMax has always been paying me the most by far. So if you want easy, reliable payments in a stable coin like USDT, BitMax has been by far the best. And don't be confused with BitMEX, which had all that sketchy stuff going. BitMax, and then their currency, BMTX or BTMX, is how you can do that, and just by staking it on their platform. And again, by far pays me the highest fees. I've earned, as far as I can tell, about $64 from BitMax, and my original investment was 296, because this is US dollars, was 296, and I've already earned $64. So that is pretty wild. I mean, it's not going to take me a long time to earn that back and then just keep on going from there. So BitMax is a really, really good one. Tron, it is what it is. Tron is a decent platform. I'm not a fan of Justin Sun by any means. He ruined Steam and DLive. Not that DLive was really very good. He could have saved it, but instead he just continued to allow it to get worse. ARPA, I sold off all that, but there was some residual income coming in. FET, I didn't get anything this month, unfortunately. Algo was 31 Algo, which is worth $9. So definitely another very, very well performing one. Clearly, by far, BitMax and Algo have been my best passive income earners. So maybe that's something to think about. Maybe I should be investing more into those. But I haven't been really adding any more principal to my investments in crypto because I really want to have a thorough understanding of the space and like what are the best coins to be invested in, etc. Before I start to really, dollar cost average into any of these coins and really double down on these. I've been focused more on just holding good coins and less on crypto passive income. But I'm still exploring all of this, and as I get a better take on it, I will probably double down on the projects I like the best. But that's still sometime in the future. And then we have Hive. I earned about 2 or so Hive from just passive interest from my power being powered up, earning about 3.4 APY. It's probably higher, honestly, but this is just like a low estimate because I can't be bothered to go and count every single day for the rewards coming in. It's just so much effort for like a very, very small amount. But it's passive, it's daily, so I really like that for Hive. The compounding interest is definitely very, very good there. And then these are the lending platforms that I'm using, earning anywhere between 85 cents to $2.89. Though I believe BlockFi was giving out bonuses for passive income made in September. I'm not sure if that's going to keep going, but it's definitely higher than the rest because of that for now. They do pay probably the best interest, but BlockFi is very, very sketchy with their KYC and their withdrawal processes. So every time I've ever tried to withdraw from BlockFi, they make me re-verify my KYC. I have to, show my ID, do the face thing, all that stuff just to access my funds every single time, which doesn't make any sense to me. And it's just tedious and really, really annoying. And I know people will not like that. So you're safest just to use Nexo and Celsius, but they all have their caveats. I believe Nexo, you earn less interest, or I can't remember exactly what it is. I'll link in the previous video where I actually looked at all of these, but they all kind of have their caveats of what's the best. I'll do a more comprehensive review of all the lending platforms in the future, but hopefully this gives you a good overview of how all these different cryptos have been performing and how I've been earning passive income. So it came to $33.66 for that month. And let's actually take a look at the crypto income side of things here. So I did forget to translate this to Canadian dollars. So let's do that real quick. I believe that it's 1.32, but let's just quickly do that because right now it's not fully accurate. 1.31 times 33.66 is actually 44.09. So this is definitely higher than I thought it was. So that's actually really good. Almost missed that. So yeah, I mean, this is pretty solid. Again, this is in Canadian dollars, so I always have to remember to convert that before I share this. But my total dividends from crypto now in Canadian dollars is $179.51. So again, that's fantastic. Here's the actual average monthly income. You can see the actual income versus projected. And, hopefully this continues going up. I'm fairly confident in how this is going, and it's going very, very well. I might actually end up investing a little bit more into Algorand and BitMax. So we'll see how this plays out. Let me know what you guys are doing, though. I'm always curious to hear how you guys are making money, how you guys are earning passive income, whether it's crypto or stocks. Always a fun time to learn about new projects and, new good opportunities. So let me know, what are you guys doing to earn passive income, whether it's crypto or in the stock market or really anything. I'd love to hear about that, and let me know what you guys think of everything that I've been doing, my investing strategy. Do you think there's going to be a second wave? Are we seeing that now? Where is oil going, and how effective do you think it'd be to focus on renewable energy and like solar right now in terms of stock market investing? Let me know all that good stuff in the comments below, and thank you so much for watching. Thanks so much for watching this video to the very end. Since you did, it'd be awesome if you could give this video a like and comment #1ham in the comments below. Also, it'd be awesome if you could subscribe to this channel and follow me anywhere under @ScottCBusiness, because I'm basically on every platform. You can find all the platforms that I am mainly using though at www.scottcbusiness.com. You can also find all my social links as well as my crypto addresses if you'd like to donate to me on Cointree at cointr.ee/ScottCBusiness. And you can also donate directly by donating to scottcbusiness.crypto or scottcbusiness.eth with supporting wallets. Anyways, thank you guys so much for watching. I really, really appreciate your support. I'm Scott Cunningham, aka Scott C Business, signing off. Cheers.